Pionex is a crypto trading bot platform with almost 20 different bots as of making this video. We're going to go through some of the most popular trading bots currently, and I'm going to show you how they work and how to use them, and then talk about some of the pros and cons of each bot and why you might want to choose one type of bot over the other. We can choose trading bots with relatively little risk or then relatively higher risk, depending on how much we want to take and how much the potential reward is. Each different bot is listed as a timestamp in the video description. If you do want to sign up for Pionex, the link is down there as well. You can go over, set up an account, and then navigate the platform before putting any crypto on there. Going to get right over to the homepage. So click that link, go through to this page, and then you can just sign in or sign up. It takes a couple of minutes, and then you can kind of navigate the platform. So once you have signed up, you're going to go through to kind of your main screen, and this is the account overview page. So you can see I've got 5,000 USD in here. It's actually US dollar tether that I've got in here, and I'm going to show you how to implement these bots. So what you can do is actually come over to your account right here, and then just come over to my balance, and that'll take you through to here. So you've got an overview of all the bots that are running, your profit and loss, and everything like that. Also, what we want to do is actually go ahead and deposit. So we'll come over to deposit, and you can see right here that you can deposit US dollar tether, or if you come up here, you can actually click a bunch of different cryptocurrencies to deposit. I would suggest tether because it's the way that you enter into most of the bots, but it supports ERC20. So if you want to send it over the Ethereum blockchain, or importantly, TRC20, and that is the Tron network. You'll pay, like $1 or less in fees. So I'd recommend that one. You can actually transfer in BEP20 US dollar tether as well. So if you've got Binance, go over to Binance, click on withdraw, and then choose one of those networks. These two are going to be way cheaper than ERC20. So the first bot we're going to look at is a grid trading bot. This is when you set a bottom and an upper price, and then it's going to take advantage of volatility within it. So when the price is moving up and down, it's going to try and set up grids within this to kind of buy low and sell a bit higher. And then when the price moves down, it will buy, move up, it will sell. So let's get into that. We can see, we come to trading bots on the right-hand side. You can see all of them listed here down above me. So we're going to get right into grid trading bot, one of the most popular. So if we click ahead on create, you can see there's two options here. We have AI strategy and manual strategy. AI is basically just letting it do its thing. Manual strategy is when you set all of the grids up yourself. So to give you an idea of kind of what a grid trading bot would be, let's say this is the price of Bitcoin against US dollar tether, right? So, you have an arbitrary amount of price movements, and you can set the grid exactly as you want. So what happens obviously is that when we enter the grid, let's say we have an upper bound and a lower bound that we draw here, right? So that's what we want to trade in, and we don't want to trade above and below that. Let's say the price is at the moment somewhere in the middle, so it's around 98. What the grid bot is going to do is actually set up a multitude of grids within this range. So let's say 98 is the price, and it buys at 98. When the price goes up to 99, it's actually going to sell. So what happens, we buy right here, and then in red, we sell right here. Now, what happens when the price moves back down is that you actually, let's say it moves right back down to 98 again, this bid will be refreshed. So what happens is the bid is actually refreshed yet again, right? So it buys it again. Now, if it moves up, it will sell. If it moves down, that will buy another chunk. And then if it moves down, you'll buy another chunk. And then what happens is it moves back up, let's say to here. And what will happen is you will actually sell this chunk. And then this moves up again, and you'll sell this chunk. This moves up again, and you'll sell this chunk. Then when it moves down again, you'll buy some, you'll sell some, you'll buy some, you'll buy some, you'll sell some in grids. So what it's doing is taking advantage of volatility. The price goes up and down like this, and it can just put in these limit orders, these buy orders and these sell orders in these grids. And when you complete a grid, that is a profit. That is something you cannot do as a human being. It's just, we don't have the skill, we don't have the speed to do this. That's exactly what these grid bots are doing. So you've got two options, AI or manual. AI, all you have to do is just choose how much you want to invest. So you can see my investment in US dollar tether right here. Let's do, kind of $500 or something like that. Click create. Now it says use MBTC instead. M stands for like mil. So like 1,000th of a Bitcoin, right? So if you trade a large amount, you'll just be trading in BTC, and it will show you that. This is basically splitting BTC into thousandths, and so it will show you that. You can actually choose between them. It doesn't matter, you're still trading Bitcoin, so it's the same thing. Just click OK, and you can see that here. So you can see the pair is, you know, Bitcoin against US dollar tether, the range right here, number of grids, and the profit per grid. So you've got 51 grids right here, and you can choose, I think, up to about 100 or more. In my experience, using more grids is probably better. So anywhere from 50 to 100 is probably good. If you only have one grid or, you know, two grids, what will happen is that obviously you will buy at the bottom and sell at the top, but they will be, you know, very far away from each other. And so you won't actually be trading any volatility. You're just basically buying low and selling high and just waiting. That's not what this grid is about. This is about trading often and, you know, flicking in and out of trades. And you can see that the profit per grid is 0.41%. Fewer grids, you get a higher percentage profit, but you trade less. More grids, you get a smaller percentage profit per grid, but you are going to trade in and out more. Let's press continue on that. You can see that loading. We'll get rid of that for now, and then that will go through for you. So that will start trading into grids for you, and it may not trade straight away. It may have to wait a little bit for the price to change and kind of hit some of the grids. But that is it, and that will go through. Now, manual setting, you can change everything yourself. So you can actually set the lower and upper price bands. So I would set these probably quite wide. So let's say 40,000, and then just looking at the AI strategy here, kind of 50,000, right? So 40,000, 60,000, sorry, to 60,000. And that would be the bottom and lower. And then the amount of grids that you want to choose, let's choose 150 right here. You can see the profit per grid is very small and the total investment. Click create, and that will start trading for you. There are some risks to this. The first one is that the price just drops and never comes back. If that happens, then you will buy a lot and have no positions to sell. What will happen though is that when the price drops, you will buy lots, and that's okay. You will actually, in a short period of time, it will appear like you've had a loss because you've bought loads of crypto and the price has come down. But as long as the price then just trades in a range, then you're starting to make those profits again and eat back some of the higher prices that you've paid. If the price then moves up again, you'll start selling the grids that you bought up at those prices and make that money back. So really, as long as you have this grid set up for a long period and it kind of trades within a range, then you'll just be printing money in those grids. And even if the price drops, as long as it is volatile within that grid again, it will start printing money again. So this is a long-term bot just for trading volatility over time. Another type of grid strategy that you can use on here is called the Martingale bot. This is a grid trade as well, but it's very different in terms of how it sets out the trades. So we can come over to the same thing. Martingale bot, as you can see here, it says DCA buy, 1 times sell. So it's very different to grid trading, and it actually compares and contrasts the risks and the pros and cons of both in the tutorial. So we'll get onto that. But if we click on Martingale bot, you can see once more you can use the AI strategy. So just let it do its thing, or the manual settings. Really what we have to look at here is the price scale and the take profit ratio. This is going to determine the prices that we get in at, and also the prices that the Martingale bot actually trades at. And that's important because where you set these will determine how much risk, how much downside that you can potentially have. So the way that the Martingale bot works, and you can come over to actually the tutorial and it will show you, essentially what happens is, instead of a grid bot where you have a grid and then it just buys and sells all within that grid, a Martingale bot will buy a small amount at higher prices and exponentially more and larger bets as the price comes down. So when you are at higher price, you don't spend a lot. If the price comes down, essentially you just keep adding to your position in larger amounts. The reason why you'd want to do this is because, well, they actually show you. So from a mathematical standpoint, adding more at lower prices is mathematically going to benefit you in terms of drawdown. So there's still a lot of risk here. But if you just let's say put 10,000 in in Bitcoin at a certain price and the price comes down, you'll obviously lose money. With this Martingale bot, essentially what it's doing is dollar cost averaging in at larger amounts at lower prices. So the actual drawdown for the same investment would be less than just investing $10,000 at the price that you wanted to get in at. So what this is essentially doing is saying, we don't know what the price of an asset is going to be when we buy it, for example, Bitcoin, but we can set up a bot to essentially take advantage of some price movements and hopefully get us in at some different prices. So it's a dollar cost averaging bot in a sense, but you can also take profits with it as well. This bot really is for long-term investors. So if you're going to get into Bitcoin or Ethereum anyway, and you think, I just want to hold these for the next 3 to 5 years, then having this bot will actually enable you to invest over time and actually take advantage of buying more when the price drops. So it's something that we would do anyway naturally as a human being to say, I'm going to buy the dip. This thing is just there for you buying dips without us having to do anything. So that's the advantage of the Martingale, but also you can set it to sell as well. The way that you reduce or add risk is by setting the price scale. So you can see here, so with the Martingale bot, you can see the take profit ratio is always at 1%, but the price scale changes. So what you can see is that the APR, if you have a price scale of 1%, the potential upside APR is higher, but the potential drawdown is also higher. If you set the price scale to say 20%, you can see the APR or the returns that you get are much lower, but the biggest drawdown is also much lower. So you can set this price scale as you wish to kind of take more or less risk and have more potential upside. We are still taking risk and taking a directional bet on the asset. So as I said, if you want to buy it anyway, then you might want to use this to get in at better prices, but this is not risk-free. You're still taking risk going long the asset. What we can do then is actually just set the parameters ourselves to take as much risk as we want. So come over to either AI or we'll change it with manual setting. So the price scale, this is what we want, right? So we can put maybe 20 to take less risk. And then the take profit, let's put it at 1%. And then the amount, how much do you want to invest? Click create, and that will start entering into those trades for you. So, take as much or as little risk as you want. We're still going long the asset. So we are still taking a directional bet, hoping the price will rise in this case. Next bot I want to look at is the rebalancing bot. This will essentially set up a portfolio of your choosing and then keep the cryptos in that portfolio in the percentages that you want. So, if someone else has a portfolio that you think looks good, if you want to get exposure to gaming or metaverse or DeFi or something like that, you can set all of that up. So come to rebalancing bot up here, click create. And then you can either do dual coin mode, which is just 2, or multi-coins mode. So let's click on multi-coins. And then what you can do is actually choose an index, which is an existing amount of coins. So if we click on choose index, you will see different people's portfolios right here, and you can see how much they're making. So we can see this is essentially a game, GameFi and metaverse. We have multi-coin, we have a top 10 coins. If you just want to get exposure to crypto and say, hey, look, just buy me the top 10 coins and, have, kind of the top coin as, let's say 20%, so slightly more, and then coming down, maybe have a little bit less of the number 10 coin. And then just keep me in that, that honestly, that will really just let you have exposure to crypto and the growth of crypto. It really is that simple. So, click choose right here. You can see all of them. So exactly as I said, Bitcoin and Ethereum are bigger plays. And then you've got, BNB, ADA. I wouldn't put Dogecoin in here personally, but, everyone's open to their own thing. And then choose these. And this will literally just, keep the top 10 coins in there for you. And it's a really simple way of just gaining exposure to crypto, not worrying about, well, should I buy this coin or that coin? The top 10 coins are the biggest, best coins, and you can just have them all in a portfolio here. Just go to customize, add new coin. You can click any coin that they support. They don't support, every single coin, but it, pretty much is. I think they actually link up with Binance and have an API to Binance. So most of the coins you can get on Binance, you can also get here as well. It's great to just set up a portfolio and just let it ride. I also want to come to the arbitrage bot. This is my favorite bot because it's just printing money, and it's very clever. And I like the way that this happens. The money that it prints is reliable, and you know exactly what you're going to get. So we're not actually going to take much risk whatsoever using an arbitrage bot. Obviously, arbitrage means virtually zero risk difference. You're just buying and selling something without actually taking a directional bet or taking much risk at all in terms of the market risk. So we can actually see the arbitrage bot, spot futures arbitrage. So we're going to click on this. And this works in a special way. So I'm going to have to explain this. You can actually see that I'm running this bot right now, and we can see some of the details. So I'm going to come into the detail page, and you can see the actual money that this is printing for me right now. So you can see that my yield, my APR on the right-hand side is around about 7.5%. So this arbitrage bot for almost zero market risk is making 7.5% yield. And it's very clever the way it does it. So what it does is it takes an arbitrage between the spot market and the futures market. So this is how it works. In the futures market, and a lot of people trade futures, there is something called a funding rate. When you go long a future and you bet on the price going up, you have to pay a funding rate to shorts. That funding rate usually at the moment is around 0.01% every 8 hours. So if you're a long buyer and there's millions out there in the market, every 8 hours, they're paying 0.01% to short sellers as a funding. And that is literally just cash that they send over to short sellers. Therefore, if you're a short seller in the futures, you receive that funding rate. That funding rate works out to be pretty decent. So you actually get the funding, you get the cash to go short a future. And this could be a Bitcoin future, which I've got here. So the downside of obviously going short a future is that you have a directional bet and you will lose money when the price goes up. And over time, we expect the price to go up. So how do we get that funding, but also take a neutral position? So it doesn't matter if the price goes up or down. What it does is it automatically, when you use this bot, goes short in the futures market and then goes long in the spot market. The spot market is cash settled. So you will take, let's say, $500 and you will buy $500 worth of Bitcoin. You also, at the exact same time and exact same price, go short the future, the exact same amount. So you are net neutral in terms of your market exposure. If the price goes up, basically this happens, and the price goes down, this happens. You're basically net neutral. So you don't have any direction. But what you've done is, because you've gone short the future, you are now receiving people's funding. So it's very clever in the way that it does that. At the moment, you can see it's yielding 7% with no market risk. There are some small risks. The first one is that the pricing mechanism breaks down. And that is potential because we're using automated systems. The API comes from Binance, so there may be a risk that the API breaks and then somehow some huge price movement happens and you kind of get stopped out of your position. That's a risk that we must know about. It's very low risk for me because prices usually move to the downside very quickly and not to the upside. And if you're short a future to the downside, that's absolutely fine. So really, there's no market risk. There is slight risk with obviously trading in a system, but you're essentially just taking people's money for going short while also having the same position in the spot market. Something else that we can do though using futures is actually using leverage to expand our position without taking any more risk. Because futures let you leverage up, what it means is you can put less of the money into the future going short because you can use that leverage, and then you have money left over to put into the long. So you're actually using less of your money going short, more going long. And because of the leverage, your position is bigger. And so you're just making more funding. You're getting that bigger funding on a bigger position that you're just using the system and not putting any in. So what you can do when you click on spot futures arbitrage, you can see the APR right here. So between 6 and 8%. Come down to leverage right here. So you can use 1 times leverage, which is no leverage, and then you can have 2 or 3 times leverage. So the more leverage you use, the bigger your position and the bigger percentage profit that you'll be making as a percentage of your original amount that you put in. The only potential downside of using more leverage is if you're going short a future, at some point, if the price rises, you're going to be stopped out because that short position is obviously losing a lot of money, even though you're personally making it back in the spot market trade that you enter at the same time. So at some point, when the price rises a lot, the future will be stopped out. You won't lose any money. The system actually puts your order, it just cancels out your order at a certain percentage. The more leverage that you use, the quicker that you will have to exit that position and then enter into a new position. The less leverage you use, the price can go up a little bit higher before you have to trade out of that short trade and then obviously enter a new position at that higher price. So, 3 times leverage, it's just going to increase your position and you'll have to trade it a little bit more actively. If the price does rise up, then obviously you want to, the system is going to trade out for you and you'll have to kind of enter in new parameters at a different price. And there are also a lot of other grids here, but they're really just kind of different versions of the same thing. So like a grid trading bot, you have lots of different versions of it. So you have the BTC and ETH Moon. You have the leveraged grid, which is when you trade a grid, but you're actually trading futures. And so you're leveraging up your trades. That is actually riskier because you are using leverage and futures there. So, you're going to have to essentially have more on account and there's a lot more risk. Margin grid is the same sort of thing. You just leverage up your positions. Reverse grid is when you just trade a grid, but you have a bias towards actually going short the market. So you think prices in general are going to fall and you want to take, you want to take advantage of volatility, but with a bias towards the downside. And then you have some other bots like DCA bot, which is just simply a dollar cost averaging bot. So you put $10,000 in an account and say, buy me Bitcoin over the next 6 months. And it will just do that over the next 6 months. And then you have that position there. So different versions of the same thing with grids and some other bots that really let you either trade actively or trade passively as well. The way that you would get out of any of these bots is just going to your trading bots down here. So you can see these are my manual positions. If you have any trading bot right here, click on detail. It will take you through to the bots page and you can see all of the different type of bots up here. For example, this one, I can just click on close and that will kind of exit my positions and take all of my positions in that particular bot out of the equation. So that is using Pionex. I think they have a bunch of really good bots, especially the arbitrage bot. And it just automates trading in many different ways that can definitely help out a lot of traders. If you want to try them out, you can click the link in the description, go through, set up an account. No KYC for the time being. That may change in the future though. Other than that, more helpful videos will be down in the description as well. I'm James with MoneyZG. Cheers for watching and I'll see you in the next one.